What should we listen to? Right now I'm drinking a pina colada. And I'm going to switch to a vodka monster next. The mango fiesta monster. Hans Zimmer you want? I'm going to listen to what I have on right now, I think. Ooh, this looks interesting. If I don't like this, I'm going to switch it, but we'll see. Hola, Lobos Dos. ¿Qué pasa? BDE. Big. I had to look that up. I wasn't sure if that meant big dick energy. That's a new one for me. I like it. What's up, Danny D? Yeah. See, I'm old. I gotta keep up with all these slangs. So, just gonna let people join. I got my spy chart up that I've been watching for a while. I think we're gonna have some chop up this next week. I have this market, but I just don't know how high it goes. I have a feeling we come down, we retest the breakout, right? So maybe it comes down. Maybe it comes down to there. Maybe it comes down to here. It's definitely coming down to 442, but I think a retest of 440 makes sense to me. It's not even that big of a drop. And then maybe we push to 450 or so. Definitely possible we could push up to 460. But with the gamma roll off on Friday, I think with everything that's coming up, I just don't see a huge reason other than people just wanting to buy right now, which is certainly possible. You know, if there's a lot of value out there and a lot of hedge funds want to reload after quad witching on Friday, it's certainly possible. So I'm going to keep watching it. This is just like in my thoughts in my head. I think we get some distribution here with a fake markup phase, and then we get some more profit taking. And I definitely think it's possible that this could even come down to 4,000 like we originally were talking about. Definitely possible for that. So that would be a third test of this channel, potentially. I saw a few people tweeting this out, that this would be a fake out and a bull trap, basically. So we were pushed up basically by a gamma squeeze on Friday, and it was kind of like a short squeeze if you think about it. And so that was a false breakout, which people are going to try to hold, and you're going to get a big battle between big bears and bulls probably the next week or two. So look for a push over 448 for the bulls to win, and if the bears can push it back under 435 or so, I think the bears can win easily. I'm more bearish than bullish, that's why I have it marked up this way. That doesn't necessarily have to play out this way, but we'll just have to keep updating it day to day and go from there. Yeah, I'm not convinced the bottom's in yet. I know I changed my chart from my original one that I had pinned to my Twitter. So, yeah, Lobos, so think of Aries as like Thinkorswim. So you know how you have to have a TD Ameritrade account to use Thinkorswim? Aries is basically the Thinkorswim that we're building over TradeStation. So it's going to be the feature-rich version of TradeStation, if that makes sense. So it's a TradeStation account, but the platform that we're going to be utilizing is Aries, and we have access to the developers, so we're integrating a lot of the TFC software that we use already to expand into all the areas that we've been promising for all these years. I wouldn't... So Zim's going to drop, you buy the dip, boom, you're good to go, Kevin. And just hold it forever again. Chris, did you ask me something on the profit percentage? Any reply? I don't see it in the chat. Did you ask me on Twitter or something? I apologize. Love to answer all your questions tonight. That's what this is about. I'm not going to be doing too much charting tonight. I am going to show you my short squeeze I've been watching. that I've been seeing getting some traction over the weekend. With it had a major breakout, which is going to trigger the short squeeze. So I am working with the developers. I am not the developer. So while I have direct contact with the CEO and all of the developers, I am not the developer of Aries, if that makes sense. But I do know that if you want it, I can get it done for you. So to keep it simple. So I'm going to want that in there personally for what I'm going to be doing. So that will be worked into there. Just while we're waiting on people, I answer questions. No, I don't really see a rising wedge. It's more of just a channel. So, now we get a bigger turnout tonight. I'm trying to drop some freaking bombs tonight. I'll tell you how to automate your trading. Come on. I think energy and oil is going to rally again. I don't think it's done. I think the huge sell-off was just basically because of the huge rally. So a lot of things in the world even out, and I think that had a lot to do with it. So I did make this chart on Zim. I think you guys were asking me. So I know I threw it in the server for you guys. Basically, a $17 drop brings it right at the top of this breakout here. And so I think we get this. I think we get maybe some sideways action in the divvy. Maybe you get a little bit bigger. I mean, you do have. I mean, you can see this. We do have a falling wedge. So maybe that falling wedge continues into the divvy to 80 thing, and then this, you know, maybe we get a drop down to 70. If it was at 80, it would drop down to 60 down here, but I think I have my actually, yeah, it would be dropping down to here from there. So look for maybe it to drop down to this blue level, which is going to give us a great price entry, right? So you got this breakout down here, and you're going to get that retest down to 66, and then we're going to go from there. Yeah, I definitely think Arch has a strong week. I think I have that up here. Oh, I have way too many indicators up here. If you look at Arch on the daily, it has some very bullish candles. You got three bullish hammers in a row, which means the shorts are trying to push it down and failing every time, and it's ending at the daily high, right? So definitely see this thing continuing to be squeezed. Yeah, I would wait after the drop, Jared. Don't buy it into the dividend, buy it after. So what are you guys struggling with psychologically wise with trading? Like what's going on that you're having problems with that I can help you with? Always over position after a few good days trading. So I mean, you get too confident basically, and you take too large of positions. So there is let me see if I can find my graphic that I made. So I made a graphic of the very first newsletter. I gotta find where I put it, but it's basically the steps people take over and over if they keep blowing up an account. So you basically start out with a plan, you're successful, you get into a trade, you make money, you get overconfident, you start upping your wagers, you keep making money till eventually you just keep upping the amount of money you put into a trade. Then all of a sudden it blows up in your face and you lose a huge amount on one trade. I see it all the time. And then what happens is you compound it by making it worse. Let me turn the music down a little bit. It's a little loud. Also, I'm not loving this music. There we go. But you compound it because you lost all that money after you just made a lot of money. So you're like, shit, I'll just make a risky trade. I'll make it all back right away. And what happens is then you compound the losses by taking too big of a risk and not sticking to your plan. And so you can have 20 green days in a row and end up giving it all back in 1 or 2 days. Shit, I've done it. You guys have seen me do it. And it is a big problem. You just have to remind yourself to stick to the plan, you know, and that could be writing out your plan and posting it right next to where you trade and constantly reminding yourself. It has a lot to do with that. And that's one of the reasons why, like, I'm such a big proponent of algorithmic trading is the plan is laid out. You just follow the algorithm trades, right? So if you know exactly what to do, you don't think about, oh, maybe I can get another 10% out of this trade. Maybe, you know, you're up 100%. Shit, this happened to me on Tesla for Friday. I was up 100% in 10 minutes, and I was like, I could probably get a couple 100% if this thing keeps going. And then with 10 minutes later, I was already down 30% because it hit a false breakout and immediately rejected down very hard. And when you're playing 0 days, you cannot mess around with that. So thankfully for me, it was only $30. You know, I didn't put a huge amount into it, but you know, $30, if you think about it, that's a really nice lunch someplace. So I just threw away a free lunch that I just, you know, it's a little painful because when you make money fast, you want to accelerate it and make money faster, and that's just not how the world works, right? I think a lot of you, if you've been following my small account, you see how I like to buy multiple contracts. And I scale all the time, every time. If I'm up 10%, boom, I immediately, I don't care where the chart's at. I still sell a little bit. I always lock in profit no matter what. 20%, I sell another. 30%, I sell another. If I have 5 contracts, I'm already 3/5 out of my position. If I get up, you know, if it goes back down to 20% after that 30%, I'll sell another because I'm not letting that trade go red. Then I have one runner left that I'm okay selling for break even, but there's no way that's going red. If it continues to go up, I'll hold it. But if it goes break even, I would just exited that trade with guaranteed money. That's why scaling locks in profits. You're never going to get max profit. But then again, when are you ever going to get max profit trading? It's all about consistency over time. So I think that's the important thing that people don't seem to understand. I'm just going to pull up. I have something here. I can't remember which layout I have it as. Not that one. No. Did I not save the layout? Yeah, either way. Alright, we'll just go up here. So, transitory, I don't really have price targets on UVXY. I don't really do TA on VIX. I mean, that's just based on people's call or put buying. So, I do it more. I watch the VIX day to day, but I don't really do TA on it. So, hey Charles, welcome to the stream. So if you guys have questions on psychology, algorithms, how to create algorithms, the important parts in proper algorithm trading, if you have questions about auto trading, put it in the chat. I want to answer your questions tonight. Not in a giant charting mood. didn't sleep a lot this weekend, so I'd rather answer your guys' questions, have a good time hanging out with you. I think these are important questions that they're going to be a huge part of TFC's future, so I want to dispel any myths or help you guys understand what's going on. So hope that helps. I mean, I think psychology is one of those things that people struggle with, and so that's why I wanted to talk about that tonight. The algorithmic trading, I hope you guys are interested in, because it basically allows you to turn your brain off and trade per profit. So everyone is like, hey, you got a book for that? No, I don't read books on trading because a lot of them are outdated, not antiquated to the current market cycle. I'm more of a YouTube and video guy, so I don't have any books off the top of my head that I would recommend, but you could probably Google trading psychology and go from there. What's the mechanism underlied on your algo flow alerts? So you talking about the options flow algorithms? What do we use to code it, or can you be a little bit more specific what you're trying to ask, Kim? Sure. So let's see here. I got something up here. We'll just pull this up here. And so one of the things we're working on, let me pull up. All right, here we go. Copy. So this is going to be kind of what the new technical algorithms look like, and what we're working on with the flow alerts as well. And this is going to be on the website too, but I've been testing it on the Discord currently. So basically, there's a couple of things going on here. So down here is our algorithm basically working. So this is telling us everything in real time. And you can see, you know, there's a buy here and there's a sell there. So you can see it called a perfect short on this. So what we're working on is you'll know the price that the algorithm triggered at. You'll know the average move that the algo does. You'll know the win rate based on how many times it hits this profit target. So based on this, you'll know the price target and you'll know the stop loss. Since this is a short alert, you'll know that this is telling you that this is going down, right? So your goal is to then buy an option or short a share, and then you sell it when it hits this target. Or maybe you sell it a little bit early just to be safe, right? Because maybe it has a 90% win rate if it gets a little safer. We're just trying to say over time. And you know, if let's say it gets up here and hits this level, so if it hits this price, you know if it goes beyond that, it's probably not going to be a winner. Maybe it will be, but the win rate is based on these two things. So then you know your stop loss, your profit target, take profit there, stop loss here. Now you can watch that in real time, or what you could do is say, all right, you know, TFC, based on your calculations, or, you know, based on the alert, what we'll be having is, what we're working on is, this is a cloud alert, by the way. So we're working on is say, hey, you know, on average, if this is going to make, because this is a 1% move that we're trying to figure out, right? So on average, if this is a 1% move, we know an option is going to move about, I'm just pulling this out of my head, 30%, right? So then you're going to set a 30% profit target, and you know on average it's going to pull down maybe stop loss 30%. So you know, depending on the contract you buy, right? So you know if it goes up 40%, you're going to set your stop loss at a 30% loss. Or maybe you do 40 because you want to make sure that you're catching it. I don't know. But the thing is you're going to set this type of alert that's going to play out in 2 days. You're probably going to want to take a contract that's 2 to 3 weeks out, right? That's some really crappy writing. So 2 to 3 weeks out, you're looking for a 30% bracket. Now what you can do is say in your broker, you can set what's called an OCO bracket. So you could say, all right, cool. You could say, I'm going to buy a, it's going to be, I think, April 15th. So an OCO order is the way you automate your trading off these algorithms. So you buy to open 415. Let's say with this you would buy a 420 SPY put, right? So then you would immediately put sell. You would go stop loss SPY. Stop loss 30%. Market order sell. You go profit or profit limit or sell. What is it? I think it's sell limit, profit limit. 30%. Market sell. Every broker is going to be a little bit different, but that's basically what an OCR order is. It means one cancels the other. So basically it'll go until one of these triggers. Now when one of them triggers, it's going to cancel the other order. So that way you can't do two things. So now for instance, there's going to be other alerts. So like I'm working on some scalp alerts that look like this, which I will be rewording. This is going to be the fancy new way that we're showing them, but that's not going to be what they look like. That's going to be what they look like when we launch them. But like, here's some algorithms I'm working on. So this is like a scalping alert. This is meant to just get 10%, right? So you're just trying to get 10% on a 0-day or 1-day expiration. You're trying to get something right at the money. 10%, 15% stop loss, or you can run a 15-15 OCO. And when I launch these, you could just throw that bracket up, maybe have it saved as a setting, and you get in, you're in the trade for 10 minutes, and you're out. You know, scalps are normally 5 to 10 minutes, trying to make 5 to 10%. But this is going to be the future of TFC. So let me show you some of the stuff we're working on. Let me see if I can find a picture that I can share with you without getting in trouble. Alright, so one of the things we did was we basically were like, we need to make something that gives us a trade plan. The whole idea last year was like, all right, we have all these great signals, but if we don't know exactly how to trade them, we'll make money, but we're always going to lose money on a lot of them too if we don't know exactly. So this is already started to roll out. So if you're in the cloud base or have access to beta testing, you've been seeing these. Now, I'm going to get these going. I think I'm going to try to get... I'm thinking about opening up either beta testing or making a public beta testing. I'm not sure yet. I want you guys to see them, but I want you to know that while they're still very new, the success of them has been really great. So I'm thinking about just having you guys, you know, signing a quick waiver, and then you could see them in beta testing, and then you'll know, you know, the idea is, hey, trade them lighter. While they are back tested, they are not fully front tested. So that means they're not live tested in live time. Now, our signals are 100% non-repainting, legit signals that are back tested over long periods of time. So for instance, I gotta probably scroll to find a cloud alert. Yeah, I mean, I've never seen people lose money. I can't find one right now, but I'll keep looking while I'm talking. But I've never seen people lose more money than this year. Like, it's very evident in the amount of people that just fell off the face of the earth, that stopped tweeting, stopped talking. Like, it's really crazy. You know, it's like we've been killing it with telling people that the market's going down, but people are still losing money. And the reason is they either don't know how to sell or they don't know how to properly execute one way or the other. And so we made a decision probably in December, and we started working towards this. And it took us a while because we're like, how do we create algorithms fast with win rates, back testing, everything? And we looked everywhere, and we spent a lot of money on back testing software, and we realized it just all had flaws. And so we're like, well, it doesn't fucking exist. We went and made our own. And so we made our own algorithm creator with full back testing and everything, and it's been a huge breakthrough for us this year. And so that's what you're starting to see come into the servers, and that's what we've been crushing it with. So if you're in the cloud base and you get those Tesla alerts, that's the first one that Avery wanted to put live. He also has the Upstart ones, which I think we probably might tweak a little bit, I'm not sure. But we have some Google and Netflix ones that we're ready with. I am very close to launching the new Super Fortuna of Spy. I'm expecting that out next week. So a lot of these, you know, we're launching about one new algorithm every few days now. And so those will go into testing live, which I'm working on getting the members access to. I'm still just trying to figure out the correct way to do that. So keep an eye out for that. Yeah, so I have Spy, the Super Fortuna that does longs and shorts. I have it close to about, I think it's at 76% win rate right now, capturing 1% moves. I'm trying to get it above 80%. So the problem I run into is the higher the win rate, the less the signal. So it's a balance between the two. So yeah, Cloud Alert is going to be what we call something that's going to catch at least a 1% move. So you want Cloud Alerts to be high percentage profit, where you're going to make a good amount, and you want the high win rate as well. So I think that's super important when designing stuff. Is while 10% is good, you know, the reality is everyone wants 20, 30, 40, 50% win rates, right? Or not win rates, but profits. So I took the surveys you guys took, and it's like, what do you guys want in an algorithm? And you guys told me you want at least 20%, you want at least 80% win rate. So there's different ways to do that. So if you want something that fires all the time, the win rate's going to be lower because you're not going to be waiting for high quality setups. So if you want something that fires longer or fires at a higher win rate, it's going to fire a lot less often. So that means we just have to make a lot more algorithms, which is going to take more time, which is fine, because if you're running 100 algorithms, odds are you're going to get 1 or 2 a day, right? Maybe even more. On a big bullish day, you're probably going to get a ton. So, you know, there's going to be a lot of different types of alerts that we're looking for. And so a lot of it's just going to be, we just need time to make the more algorithms, because we want to make them where you just, you know, you're going to win 3 out of 4 trades. If you win 3 out of 4 trades, that's probably beating a lot of people out there, right? So that's kind of where we're going from there. So hopefully that guys answers some of that question. So let me just catch up on some of the questions you have here. So Jared, what you could do in terms of a single contract on Tesla is you could play a spread on it. You know, you could play a debit spread and just basically look for 20 to 30% on that. Those will profit about the same amount, and you could probably play it for 1/10 the cost on a spread. Now, odds are you need to play contracts that are adherent to your size, right? So you just have to go with that. So beta testing right now is only open to the original Aries testers that we selected and a couple select members, but I will be creating a new room that everyone will have access to. That's a standard member. No, I'm not replacing any. So right now all the flow alerts are based on options flow. All these new algorithms will be based on technical or technical analysis. So the flow alerts will be based on options flow, which we'll keep, and people can keep playing those if they want. This will be based on technical analysis, so people can play it based on that. This music's sad. I need something a little cheerfully. This looks interesting. Let's play that. Yeah, I mean, Dan, to your point, I think if you could get 2 to 3 trades a day and you win 2 out of those 3 trades and you put $500 in each, and let's say you win $100 on the 2 trades you win and you lose $100 on the trade you lost, you're still making $100 off of $1,500, right? So granted, that's only like a 7.5% gain on the day, but imagine you do that every single day. That's what we're trying to achieve here with the new pivot this year. And it's not really a pivot, it's more just getting back to our roots that we founded the company for. Is, if you're not familiar with my backstory, the whole reason I made TFC is I was working 60 hours a week and I had meetings all the time where I couldn't pull out my phone and check my trade. So I would make this awesome trade where I go up 50%, I'd get called into a meeting, and if I didn't set a stop loss, there's a good chance I could be down 10% by the time I got out of that meeting. So I was like, I'm an awesome trader. I've been trading for, 3.5 years. All the other people that you see at TFC have been trading at least as long, if not longer. Why can't we take our collective knowledge, create algorithms and alerts off of those, and then just trade those so I don't have to do all the pre-work? And I think we've gotten really good with the flow alerts, and I think the original Fortuna and Super Fortuna were good, but because, and they were back tested, but because we didn't have the stats, we just had the markers on the screen, so we didn't know max profit, max drawdown, time and trade, things like that. That was the inherent flaw in all those technical algorithms we did. And so we set about probably in November to figure out how to get those stats. And it's been a long journey, but we figured it out, and we're finally ready to start showing everyone that. So if you see this right here, this is basically our algorithm overlaid on TradingView. So this isn't anything I've coded, this is just a random algorithm that I threw on here. But you can see it's got win rates, it's got losses, the win rate's basically bull, bear, and then combined. It's got trades per day, it's got average trades in time, it tells you how much of the data sample you're taking, it tells you your average win, average loss, it tells you everything you need to know to be algorithmically traded and potentially auto traded as well. And that's what we're going towards this year, trust me. So you can see I have all these different technical algorithms on here, and this is basically the brain behind everything that we're working on. So you have hundreds and hundreds of technical indicators and everything that we can make algorithms off. And the idea is, you know, you have your brain, you have your potential spots where you want to buy and sell, and the idea is then to create algorithms based on that to figure out how to get those to buy and sell where you want them to, right? And so you're either going to have like momentum algorithms that just keep buying on uptrends. You're going to have reversal algorithms that buy the dip, and all different sorts. So hopefully this helps shed a little bit light on what we're doing, but it's really exciting, and I'm super excited about it. I don't have a TD Ameritrade opening range breakout. I do, however, have a Thinkorswim one. Forget what I call it though. There it is. So I do have an opening range breakout alert. So this will tell you, takes the opening range right here, the first 15 minutes, and then it shows you the alert that pulls right there. So this would have bought at 4:39 on Friday. It's pretty cool. So, all right, let's see what other questions we got going on here. If you guys want this algorithm, or if you guys want this opening range indicator, it's currently a private TFC one, but I'm working on getting it for the masses. Yeah, so the reason we made Tesla to start with is everyone loves Tesla. So we're going to continue going with probably the most popular tickers, and a lot of those will obviously be cheaper tickers as we go on. So like Apple, AMD, a lot of those will be developed very quickly. I believe the AMD one is almost ready to go. The Google one's ready to go, which will be better once they split. And then we'll probably make an Amazon one, which will be really good once they split as well. So Jared, nothing in TradingView will place trades for you. You'll have to do that on your own end. But the alerts will come through on TradingView if you want. For this indicator, at least. Upstart's already created in Cloudbase. The reason the ones that he put into his channel is he created them for himself. Those will eventually go into the testing channels. And so I'm going to work on this week getting that testing channel set up for all standard members. So standard members will be able to see what we have in testing. And if you so choose at your own discretion, you'll be able to play them. But that'll be at your own discretion. So you don't link TradingView and Thinkorswim right now. So, yeah, they'll be in both, Christopher. All you have to do is type !CB to get the Cloudbase tag. Avery's very involved. He's the one that created the Tesla and the Upstart alerts. All of the head of TAs that we have right now, all are working together with us on this. It's a very much a team coordinated effort. It's a really good question, Jared, and I'm honestly a victim of it myself. How do you hold a crappy play all the way to zero and hope to pay for it to come back. There comes a point where you say to yourself, well, I'm down 80%. It's worth $100. Why would I sell it now? Well, the likelihood is that $100 is still probably going to zero. So is $100 better than zero? Yes, it is. But the fact of the matter is, how do you let it go down to 80% to begin with? And I've been a victim of this. Because it depends on where you set your stop loss on your chart. Like, if you don't buy yourself enough time, then you have to figure that out in your chart. So let's say you're playing a swing and you're playing a weekly. You have to accept the fact that it could go down 80% the next day. But if you're playing something that is a month out and it's going down 80%, that's a major problem. And think about it this way. If you're playing something a month out and it goes down 30% and the chart looks ugly, why wouldn't you just possibly sell it and be able to get a better entry? There's nothing saying that you can't sell something for a 20% loss and then get back in it once it confirms that it is breaking out. If you're trying to get a good entry and it doesn't break out when you think it's going to break out, the odds of that trade working out are probably vastly reduced. So hoping and praying at that point is really bad. And taking a 10% loss and admitting that you took a bad entry is better than hoping and praying and taking an 80% loss. So hopefully that helps. I saw everyone in the channel spam CV. That's funny. I'm still in talks with TradeStation. They're supposed to let me know Monday if I'm going to get reimbursed for the Google mess up. So, yeah, we've been talking for about 45 minutes. Let me share my squeeze idea with you guys. I'd love to share this. So this is my squeeze idea. So Dillard's is a heavily shorted stock that's been in a box forever, and you can see it basically has been trading in this box. Let me pull up the short data, throw it on the screen for you guys. We can dive into this. I'm going to show you a whole bunch of stuff on why this stock's going to go back to 400. You're going to see a 30% move in this. Appreciate you guys sticking with me this long if you're just waiting for the short squeeze idea. Alright, so the data is still, it's not perfect, but we can get in now before it really takes off, which is what I'm trying to get to. Kevin, of course he did. There's a couple going on right now, but this one, of all the setups I saw, this one has the best setup. So what I'm thinking happens is it's going to retest the breakout, right? Everything always retests the breakout. So look for this to come down with the market to 281 and then rocket itself up to 330 and then come back down to possibly 318, and then maybe we get a squeeze up to 376 before the dividend. And I'll show you why. I mean, we're just playing the levels at this point. Right? So you're just playing the levels at this point. So 39% shorted, and while the chart looks great and the short percentage looks great, that's not why it's great. Let me show you really why it is so great, because it's fundamentally great as well. So financially wise, it has a 6 price to earnings ratio, which is insane. Super undervalued. They just had a record earnings, their last earnings report, February 22nd, which was just a month ago. So record earnings, and while their total assets and all that isn't super intriguing, the earnings is intriguing. Like, they just had a net income of 300 million. They had a revenue of 2.1 billion. So this last year they had a revenue of 6.6 billion, and net income of 862 with a profit margin 13. They have 5.7 billion cap. So it is a larger cap that we're looking at squeezing here, but with huge cash flow amounts, nice balance sheet, really healthy. The book value per share is a little high, but the cash flow combined with everything else, you know, the quick ratio is super low, so they have no problems meeting their debt. They have no reason that they're going to need to do share cash raises or do a share offering. Everything tells me this is going up. So the major breakout obviously was over 283. Now maybe it doesn't go down, maybe it only goes down to 289. I do expect a at least a better entry, but I think we take April 15 300 calls, should print money. So I think April 15th, that gives us 3.5 weeks. If you want to go May, you could go May. It wouldn't matter. So, why are you looking at LEDS? Is there a reason for it? Does it have something to do with short squeeze? Because I bet you it doesn't. Nile, huh? Bit Nile Holdings. I haven't looked at that one. Let me pull it up here. I don't see it. 9% shorted. Not my cup of tea. I like to see high short percentages. I like to see the cost to borrow go up. So what we're going to be watching is this cost to borrow to rise. As soon as this starts to get over 100%, that's when we know this is going to start squeezing. But if the price keeps going up, the shorts aren't going to want to hold on even longer. Now let me pull up something about DDS. We're going to want to see how long these have been in their shorts as well. That's a very big key. So we want to know average day on loan. Right? So average day on loan, 59 days. I'll throw that up on the screen for you guys. Yeah, IMPP, if they squeeze anymore, probably a fat offering. Those ones not fundamentally as good as DDS. I love stocks that are fundamentally sound, that are highly shorted. They're my favorite squeezes. So 59 days, we're looking at 2 months out. So these guys have been holding, you know, since mid-February. So the average price that someone has probably shorted this, I mean, honestly, you can see they started shorting it right around, what was that, like 300 or so? And then it's been rising ever since. So you can see it started to rise around here. So they started shorting it around here, and it's not been working. So you can see the average short is probably around 270, so they're already underwater. So they're probably hoping this thing rejects and comes back down. I don't think the dividend is that high, only 0.27%, so the dividend's not going to save them either. So this thing is absolutely one that you're going to want to keep on your radar. Yeah, it's not going to be cheap. I mean, short squeezes always have implied IVs higher than you would like, but if it goes to 400, that's 1,000%, Jared. So if you're paying $1,000 and it goes to 10,000, are you really going to be upset? Now, if you only have $1,000 and that's your whole account, that's not a risk you should take. Now you should look at more of potentially a spread. So maybe you take a 300, 310 spread. Maybe that's only $100 and you still have that 1,000% upside. So hopefully that's a different way to play it. Another way you could play it is a put credit spread. So if the IV is going to be super high, selling puts on it may be another way you could go. So what you could do is maybe sell a 300 280 put for, so you're buying the 280 put and you're selling the 300 for April 15th. As long as it closes over 300, you're going to have max profit. So spreads are not allowed on cash accounts, correct? But if you have a margin account, spreads are the way to go. If you have a margin account and you have a small account, spreads will help you maintain safer risk to reward plays. Wow, coffee. That is not that is not a cheap contract. Hold on. Let me pull up the options contracts on here on my phone here. We can talk about this together. Alright. DDS. Let's come up with a good plan on how I would play this. And if you choose to follow, that's up to you. This is not financial advice. Right? It's up a ton after hours too. Alright, so April 14th. I got the April 14th 300 at $16. I think you're looking at the ask. You probably want to look more at the mid. So let's find the top OI first of all on DDS. And then we're going to take those two and make a spread out of it. Alright, so... Oh, wow, this thing just doesn't have really good open interest. That's an issue. So you're probably looking at... I wonder what selling a May 280, 240 put would net us. Let's figure that out. Alright, so... we're going to sell the 280 put, and we're going to buy the 240. And we're going to net $1,400 with a max loss of $2,600. That's not bad. So you're basically making $1,400 to sell something super far out of the money. You're risking 2 to 1 there. So your risk reward's 2 to 1, but on a credit spread, that's not too bad. Yeah, Sig and Dapper also are working on some algos. Yes, Christopher. The reality is it doesn't matter who makes them as long as the stats are there. But yeah, the whole team's working on them. So I would do, if you wanted to go super risky, let me see something. The 400 call for May 20th is $600. You could probably do that. The 330 call for April 14th is the highest. OI, that has, that's about $600. So I think 330 call would be fine. But you're going to want to find something with liquidity. You're like, I see that APPH there. Why is it doing this? There we go. So I think APPH has some room down, maybe back down to 580. I don't think I'm wrong in being a Packers fan. It's been treating me pretty well. SPRT squeeze? I don't even think SPRT is a ticker anymore. BGFV a squeeze candidate? Maybe. Thing with BGFV is while it is heavily shorted, very similar to Dillard's. The fundamentals aren't as great, so you can see they made good money, and they still have, you know, 4 price to earnings ratio. The profits have been declining, unlike Dillard's, but there has to come a point where it's like, when are people gonna come back into it? And maybe we force our hand on it. But the thing is like last time we had a catalyst, right? We had the special dividend, right? So we had that special dividend, and it turned out it was really good run up, right? So we played it from 25 all the way to 48. Amazing. If you held it too long, probably not amazing. But it was a really good play. Made a lot of money on it. Hopefully a lot of you did. And so is it gonna do it again? We'll see. But odds are it probably isn't squeezing the 48 again. Maybe it squeezes the 30. 17 to 30 would still be really good, right? So look for that breakout. I'm actually going to set an alert on this for myself. For that breakout about over 1765. I don't know how you can't tell Sig and Dapper apart on the live chat. They sound nothing alike. Like, literally nothing alike. Like, Sig sounds like... what would you call him? Like, almost like a doctor, and Dapper sounds like someone you'd go hunting with. So, BBIG and Rally. I mean, here's the thing. Usually things squeeze once. They don't tend to squeeze multiple times. If you missed the initial squeeze, yeah, BBIG is only 15% shorted. All these used to have large short interest. They don't anymore. That's why I don't talk about them anymore. Rally's at 7%. So, it's just, it is what it is. All right, any final questions you guys have? So coffee lever, I'll start with the mid, and then I'll up it from there. If it's something I'm trying to get in right away, I might go with the ask. But with something with a huge spread, let's say an option costs $2,000, and the bid is $1,200, and the ask is $2,000. I'm not gonna just bid something that's $600 difference. Like, that's crazy. Like, I'm gonna go with like probably slightly below mid. Hold on for a little bit. Either it'll fill or it won't, and then, as long as the stock's not like catapulting, I'm not going to pay the ask, right? I'm also going to be looking at, okay, well, if I do pay the ask, what are the odds that it's going to go in the money too? So if something's a 300 and I'm paying $2,000 for it, that means it has to go 320 or higher for me to be in the profit on it. So you have to take all those into account. Did I miss your question, DK? And the stock is running up, and I'm worried of entering it like shop kept running, never entered. I mean, if something's already hit the breakout point, sometimes you just got to get the popcorn and watch it, and just not get FOMO. 9 times out of 10, when you chase something that's already running a ton, you're gonna lose. The one time that it doesn't work, then you're gonna get that FOMO. So you're like, yeah. And to Christopher's example, if it has a huge run and it retraces 50% and then bounces on that 50%, that's where you enter. So if you get that major run to begin with, comes halfway back for the day, and then you see a bullish engulfing, then you can do that. VLCN, I could check the short interest on that. I'll be wrapping this up here soon. I've been going for about an hour, so got some stuff to do. VLCN is 0.56% shorted. Almost isn't shorted at all. Zero short interest on it. Right now I have a monster, and it's the Mango Fiesta Monster, and I can show you VLCN if you don't believe me. I'm not lying. But Monster, no, I need some energy tonight, so Monster and vodka. Futes? Yeah, we can wrap up with some Futes. Oops. Actually, let's go over here. Throw you my Wyckoff chart up. So I made this a long time ago. I adjusted it yesterday, and it's following perfectly. So you can see this 200-day moving average. Hard rejection off the 200-day moving average. Solar stocks, art will be popular if energy is popular. So solar is getting a boost right now from the German or the Ukrainian-Russian war. If we continue to see added pressure to get off of Russian energy, then solar will see a bounce from that. I would rather just long oil, coal, and natural gas, particularly natural gas is my number one energy, but you could play some solar, yeah. Yeah, I probably won't be trading tomorrow. I really want to finalize some of these algos I've been working on and get those going into the server. So that'll be what I'm doing tomorrow. I'll probably be on voice helping you guys out, but the goal is to get that going for you guys. Let Sig Dapper and Avery and Airdrake, there'll be plenty to help you out on live voice. I'll be there if you have questions, but I want to get algorithmic trading here now, ready to go for all members. So I still wouldn't swing much. I expect volume to be down this week, Christopher. I think a lot of WODs were unloaded last week, so I think volume will be down this week, and the average moves will be down, so you won't see as big of explosive moves. And like I said, you know, I have a SPY trading in a range for about a week and a half now, so just keep that in mind. Live data costs like $2. Why wouldn't you have it? So you want me to talk about the bond chart in the newsletter, so yeah, I totally understand why you want that. Let me pull that up here. I added that for you guys because I just don't see people talk about it ever, right? So if you're not familiar with it, this is what it looks like. This is kind of the one I added. It's not secret information, so I don't mind sharing it. So basically when short-term bonds... So when bonds invert, that means it's safer for people to invest in bonds for the short term because you're getting higher returns short term in bonds, which means people aren't trusting equities, right? So when bonds invert, that means people can make more money short term in bonds than they can in the equity market, which shows a distrust in the equity market. So when they invert, that can show a huge key that we're going to be getting a recession happening, and that's why I wanted to talk about it. I really think you guys should do some investigation on your own because I could talk about it for an hour here, but the key of it is inverting bonds means we're probably heading towards a recession. You can see the last one. This one doesn't show it. Let me pull up a larger time frame here. So if you go back to like the 2000, right? So you can see so here's a chart that goes back to 2000. So you see all the crashes that we've had, COVID, the 2008 financial bubble, the 2000 tech bubble, all those, the bonds inverted and the stocks crashed, right? So this one was precursor to 2008, and that's when we had the recession. So you can see usually they'll invert and then we have strong rallies after, but bonds have been going down all year starting with mid last year, which is a huge red flag for equities, and that's why you've been seeing just the huge drop off. So yeah, Jared, recession just means you're going to be buying puts more than you're buying calls. So that makes sense, Kevin. I understand why you're cutting. Why do you want to play Neo? Neo's a shitty stock. Neo hasn't been relevant for over a year. You shouldn't even have it on your watch list anymore. It's like you shouldn't have AMC, GME, or Neo on your watch list anymore. They are no longer relevant. I have not looked at gold today, but I have looked at it recently. So gold futures look great. You can see it's green today. You had the breakout, the retest. You did have kind of a double top here, right? So I do expect gold to run this week. I think the retest was healthy, so look for gold to break out on this next run. I think gold can hit 3,000 this year. I'm very bullish on gold and commodities in general, especially mining and materials. So, all right, let's look at NQ, and I'm gonna wrap up there. Hopefully, you guys enjoyed the stream this time. It was a little bit different than normal. I didn't look at as many stocks, so I hope that didn't bother you. And you can see, oh, looks like I still have that up there. It isn't playing out exactly like I had it there. I thought this had it playing out differently, but let's look at this on the 15-minute. So NQ is in a current channel right now. Just watch for that break of that channel. I think breaking below this most recent pivot will also be a sign on it. So if NQ breaks below 14,300, that's going to be your short sign. But it looks like it might bounce there. I'm indifferent this week. I'm torn. I think the market could go either way. I really want to see how tomorrow goes and then just digest it and then decide how I'm going to trade after that. So again, not going to be trading tomorrow, just going to be digesting everything and then making a decision off of what I see tomorrow. You don't have to trade every day. I think that's a big problem people have, and I think that's part of the psychology of everything, is people think they have to trade every day, where reality is if you don't have a clear edge on where the market's going or where you think it's going to be going, there's no reason to trade. If you don't have an edge in trading, you should not be trading. And so the edge I'm trying to provide is the new algorithms, but we have to go from there. So if you're like, I just want to squeeze an Apple at the last second here. I would expect to pull back on Apple, but I think Apple could pull back possibly to 160, maybe 162. We'll see though. It just hit the 200-day on Friday at close. Odds are, that's not the 200-day. I don't know what that is. That's something else. Never mind. But that's a hell of a run for it not to pull back. So, everyone, thank you. Have a great day and enjoy the rest of your night. And we'll see you guys tomorrow.